Before preparing the schedules, we need to just write the format of balance sheet as well as the profit and loss account. Next is current liability. So, before writing current liability, first we need to make a total of current assets. Miscellaneous expenditure to the extent not written off or adjusted. Hello everyone, I am Meghana from the Department of Commerce, lecturing in Vidhyaashram First Grade College, the Temple of Excellence. We are in the session 13 of Unit 1, Subject Accounting. In the last session, we have discussed about final accounts of a joint stock company. In our last session, we have discussed the meaning, introduction and format of joint stock company. In today's session, let us start with the problem. So, first problem on joint stock company. Prepare a balance sheet in vertical form as at 31st March 2008 from the following information of National Company Limited. So, for the National Company Limited, we need to prepare only balance sheet, vertical form of balance sheet. So, here no need to prepare profit and loss account. So, we need to prepare only the balance sheet for National Company Limited. Trial balance, cash and bank balance 3,40,000, advances 4,50,000, sundry creditors 12,50,000, term loans secured 18 lakh, unsecured loans 3,10,000, staff advances 80,000, provision for taxation 2 lakh, securities premium 8 lakh, loose tools 1 lakh, investments 2,50,000, sundry debtors 14,20,000, miscellaneous expenditure 60,000, provision for doubtful debts 40,000, loans from debtors 3 lakh, stores 5 lakh, stock of finished goods 8 lakh, capital work in progress 3 lakh, general reserve 32 lakhs, fixed assets written down value 56 lakh, loss for the year 4 lakh. Then additional information. First, share capital consisted of 10,000 equity shares of 100 each fully paid. Next, 8,000 10% redeemable preference shares of rupees 100 each fully paid. Depreciation on fixed assets 6 lakh. So, from this information, we need to prepare balance sheet in vertical form. Before starting into problem, first we need to know the schedules. For the balance sheet, you need to prepare 11 schedules. First, write down all these schedules. Schedule number 1, share capital. Schedule 1, share capital. Schedule 2, reserves and surplus. Schedule 3, secured loan. Schedule 4, fixed assets. Schedule 5, inventories. Schedule 6, sundry debtors. Schedule 7, Schedule 8, loans and advances. Schedule 9, current liability. Schedule 10, provisions. Schedule 11, miscellaneous expenses. So, this is 11 schedules we need to prepare for the balance sheet. Total, we have 21 schedules, but for the balance sheet, you need to prepare 11 schedule. Here for this problem, prepare balance sheet only. So we need to prepare 11 schedules. First, before starting into problem, just classify the information between the schedules. So here schedule 1 is share capital, schedule 2 reserves and surplus, schedule 3 secured loan, schedule 4 fixed assets, schedule 5 inventories, schedule 6 sundry debtors, schedule 7 cash and bank, schedule 8 loans and advances, schedule 9 current liabilities, schedule 10 provisions, schedule 11 miscellaneous expenses. First, identify schedules. So cash and bank balance. Cash and bank balance comes under schedule 7. So write schedule 7. Next, advances. Here advances, loans and advances. Schedule 8. Sundry creditors. Sundry creditors comes under current liability. Current liability includes creditors. So write schedule 9. Term loan secured. So secured loan. Secured loan is schedule 3. Next, unsecured loan. Unsecured loan, we are directly going to write in the balance sheet. So balance sheet, directly 3,10,000 you are going to write in balance sheet. Then staff advance. Staff advance, loans and advances, schedule 8. Next, provision for taxation. Provisions. Provisions is schedule 10. Next, securities premium. Securities premium comes under reserves and surplus. Reserves and surplus, schedule number 2. Next, loose tools, schedule 5. Investments. Investments we are going to write directly in the balance sheet. Next, sundry debtors. Debtors, schedule number 6. Miscellaneous expenses. Miscellaneous expenses, schedule 11. Provision for doubtful debt. Even though this is the provision, but this is the provision for debtors. That means provision for doubtful debt. It is related to sundry debtors. So schedule 6. Loans from debtors. Loans from debtors comes under current liability. So current liability, schedule 9. So write schedule 9. Stores. Stores comes under inventory, schedule 5. Next, stock of finished goods. This is also inventory, schedule 5. Capital work in progress. Capital work in progress directly in balance sheet. Then general reserves. General reserves, reserves and surplus, schedule 2. Next, fixed assets. Written down value. Fixed assets is schedule 4. Then loss for the year. This loss is profit and loss account final amount. That means for the current year we are in the loss for 4 lakhs. So profit and loss account. This is directly in balance sheet. So next, additional information. 10,000 equity shares of rupees 100 each fully paid. That means 10,000 into 100 is equals to share capital. This is share capital, schedule 1. Next, 8,000 10% redeemable preference share. So this is also share capital, schedule 1. Then depreciation on fixed assets. Fixed assets is schedule 4. So depreciation also comes under schedule 4. So first we need to identify the schedule number for the given problem. Then start solving the problem. Before preparing the schedules, we need to just write the format of balance sheet as well as the profit and loss account. If they ask you to prepare both the balance sheet as well as profit and loss account, you need to write the format of balance sheet as well as profit and loss account. Then start preparing schedules. Then write down the schedules. After that, write the amount in balance sheet and profit and loss account. For this problem, we just need to write the balance sheet. So first write down the format of balance sheet. So write the format of balance sheet. This format we have discussed in the last class. So write the balance sheet format. National Company Limited balance sheet as on 31st March 2008. First, sources of funds, that is liability. Sources of fund means liabilities. Under that, first, share capital. We need to prepare Schedule 1 share capital, Schedule 2 reserves and surplus, secured loan, unsecured loan, then fixed assets, then capital work in progress. Directly we can write it in the balance sheet. Then investment also. Then current assets. Current assets includes inventories, sundry debtors, cash and bank balance, other current assets, then loans and advances. Then less current liability. Current liability, provisions. The result is net current assets. Current assets minus current liability is equals to net current assets. Then miscellaneous expenses, profit and loss account. So write down the format of balance sheet before preparing the schedules. So now start preparing schedules. First schedule is Schedule 1 share capital. Schedule number 1. Just look at the problem. We don't have Schedule 1 here. Just we have share capital in the additional information. 10,000 equity shares of rupees 100 each fully paid and 8,000 10% redeemable preference share of rupees 100 each. Write down this 10,000 equity shares of 100 each. 8,000 10% redeemable preference share. This is equity share and 8,000 is preference share. Write down 10,000 equity share of 100 each. So 10,000 into 100. 10 lakh. Next, 8,000 10% redeemable preference share. Redeemable preference share of rupees 100 each. So 8,000 shares of rupees 100. That is 8 lakh. So now make a total 10 lakh plus 8 lakh, 18 lakh. Now we got the answer for Schedule 1. Schedule 1 is 18 lakh. So write share capital Schedule 1 amount is 18 lakh. Next, Schedule 2 reserves and surplus. First, identify all the reserves and surplus. Schedule 2. You have securities premium 8 lakh. Then general reserves 32 lakh. So general reserves 32 lakh and securities premium 8 lakh. So write Schedule 2 reserves and surplus. Under reserves and surplus, first one, securities premium. Securities premium is 8 lakh, right? 8 lakh. Next, general reserve. General reserve 32 lakh. Total 32 lakh plus 8 lakh, 40 lakh. So 40 lakh is schedule 2. So write schedule 2, 40 lakh. Next, total of shareholders fund, that is 18 lakh plus 40 lakh, that is 58 lakh. So write it in outer column. Here in the last session, while discussing the balance sheet, this column is the figure at the end of current year. This column is for the figure at the end of previous year. But here we don't have any information about the previous year information. So write it as amount. That means the amount for the current year. So shareholders fund is 58 lakh. Next, second one, loan fund. Under that first one, secured loan. For secured loan, we need to prepare schedule 3. So find schedule number 3. Term loan secured 18 lakh. So only one item for the schedule 3. That is term loan secured, that is 18 lakh. So write schedule 3 secured loan term loans secured 18 lakh. So write 18 lakh for secured loan. Secured loan 18 lakh. Next, unsecured loan. Unsecured loan directly we can write in the balance sheet. So that is 3 lakh 10,000. So write 3 lakh 10,000 for unsecured loan. 18 lakh plus 3 lakh 10,000. 21 lakh 10,000. Write outer column 21 lakh 10,000. Now, liability total, that is shareholders fund plus loan fund. 58 lakh plus 21 lakh 10,000. 58 lakh plus 21 lakh 10,000 is 79 lakh 10,000. So total liabilities is 79 lakh 10,000. Next, asset sides. Application of fund means assets. So here first one, fixed assets. Fixed assets, we need to prepare schedule 4. For the fixed assets, we have only one fixed assets. That is fixed assets written down value is 56 lakh. Then in the additional information, we have the depreciation on fixed assets 6 lakh. So consider 56 lakh and 6 lakh. For the schedule 4, schedule 4 is fixed assets. This is fixed assets. Gross block. Next, we need to deduct depreciation. Next, the result is net block. So here we have only one fixed asset. So write fixed assets. If there is any fixed assets like land and building, plant and machinery, furniture and fixtures, you can list the fixed asset. So here Gross block, that is written down value, fixed assets value is 56 lakh and depreciation is 6 lakh. So write gross block is equals to 56 lakh and depreciation is 6 lakh. Now after deducting depreciation, net block is 50 lakh. So this is schedule 4. Now write in the balance sheet. In balance sheet we have gross block. Gross block is 56 lakh. And depreciation, less depreciation is 6 lakh. So 56 lakh minus 6 lakh is 50 lakh. So we'll get this amount in schedule 4. So this is the fixed assets net value, net block. So consider this 50 lakh, then capital work in progress. Capital work in progress is 3 lakh. So write 3 lakh directly in balance sheet. 50 lakh plus 3 lakh, 53 lakh. 50 lakh plus 3 lakh, 53 lakh. Write it in outer column, 53 lakh. Next, investment. Investment is 2,50,000. So write directly outer column, 2,50,000. Next, current assets, loans and advances. First, inventory. We need to prepare schedule 5. Find all the schedule 5 items. Loose tools, then stores, stock of finished goods. Total 3 items. Now, prepare schedule 5. Schedule 5. Inventories. First inventory item is loose tools. Loose tools is 1 lakh. Next, stores 5 lakh. One lakh. Stores 5 lakh. Next, stock of finished goods 8 lakh. Now make a total. 8 lakh plus 5 lakh plus 1 lakh. Total 14 lakh. So write 14 lakh for inventories. Inventories 14 lakh. Next, sundry debtors. For debtors, we have sundry debtors. Schedule 6 is 14 lakh 20,000. Next, full debt 40,000. So 14 lakh 20,000 and 40,000. Schedule 6. Sundry debtors. First, sundry debtors is 14 lakh 20,000. Next, less provisions for doubtful debt. Provision for doubtful debt 40,000. 13 lakh 80,000. 13 lakh 80,000. Sundry debtors is 13 lakh 80,000. Next, cash and bank balance. Cash and bank balance 3 lakh 40,000. So, right, schedule 7, cash and bank. We have only one amount. Cash and bank balance 3 lakh 40,000. So, right, 3 lakh 40,000. So, right here 3 lakh 40,000. Next, other current assets. Just check whether we have any other current assets. No, we don't have any other current assets. Next, loans and advances. Schedule 8. Just find Schedule 8. Here, staff advance 80,000. Then advance 4 lakh 50,000. Only two items. Advance 4 lakh 50,000. Staff advance 80,000. Schedule 8. Loans and advances. First, we have advance 4 lakh 50,000. Then staff advance 80,000. Total 5 lakh 30,000. 5 lakh 30,000. So, this is current assets. So, now make a total of current assets. Total of current assets. Next is current liability. So, before writing current liability, first we need to make a total of current assets. Total current assets is 36 lakh 50,000. So, 36 lakh 50,000. Next, current liabilities. Current liabilities and provisions. First one, current liability, Schedule 9. Under Schedule 9, loans from debtors, sundry creditors. Only two items. Sundry creditors 12 lakh 50,000. Loans from debtors 3 lakh. Under current liability, sundry creditors 12 lakh 50,000. Then loan from debtors. Loan from debtors 3 lakh. Total 15 lakh 50,000. So, right, 15 lakh 50,000. Next, provisions. Schedule 10. Provision for taxation 2 lakh. Only one provision. So, Schedule 10. provisions. Under that, provision for taxation. Provision for taxation 2 lakh. So provision is 2 lakh. So right, 2 lakh. 15 lakh 50,000 plus 2 lakh 17 lakh 50,000. So from 17 lakh 50,000, 36 lakh 50,000 minus 17 lakh 50,000. If you deduct 17 lakh 50,000 from the 36 lakh 50,000, we'll get net current assets. So net current assets is 19 lakh. Net current assets is net current assets 19 lakh. Next, miscellaneous expenditure to the extent not written off or adjusted. Schedule 11, miscellaneous expenditure 60,000. Last schedule, schedule 11, miscellaneous expenses. Miscellaneous expenses. Miscellaneous expenditure 60,000. 60,000. Right, 60,000 for miscellaneous expenses. Next, profit and loss account. In this problem, we have not yet prepared profit and loss account. In the question only they have given loss for the year 4 lakh. So 4 lakh is loss for the year, right? 4 lakh. 4 lakh plus 60,000, outer column 4 lakh 60,000. Now total assets. Now make a total all the assets. 53 lakh plus 2 lakh 50,000 plus 19 lakh plus 4 lakh 60,000. Answer is 79 lakh 10,000. So total assets 79 lakh 10,000. Total liability 79 lakh 10,000. So our balance sheet is tallied. So this is the solution. This is the simple problem on final accounts of a joint stock company. In the next session, let us meet with one more problem on joint stock company. Until then, keep watching. Thank you.